One of our shows here, the Business Growth Cafe, who's hosted by a guy named Angelo Ponzi. He had built an ad agency and sold it, and now he works as an interim chief marketing officer for different companies here. And so he brings in, he's always talking about what the changes are in business. That's certainly a big change that we've seen. I grew up I'm considerably older than you guys here. I'm in my 60s. I remember the days of Jack Welch when you joined GE because they were going to promote from within. They were going to develop a team, and you had a career path for the rest of your life. That doesn't seem like that exists anymore.
Yeah,
today.
not as much. It's interesting because companies these days aren't looking, I mean, they are looking 4, 5, 10 years out. They are definitely doing that, but they're judged every 13 weeks. If you're a public company, you've got to hit your quarter. If you don't hit your quarter, your stock tanks. I was just watching it today. Yesterday, Nike, a couple other companies hit. They had negative earnings, or they didn't have a great release. It wasn't, maybe they weren't losing money, but they weren't as positive as they should have been. And so that
didn't hit the numbers.
Yeah, they didn't hit the number. And so the company now is no longer trusted by Wall Street. The stock tanks, and they've got to lay off folks. So these days, companies are looking at that quarter.
After
really,
13 weeks, you've got to make those kinds of critical decisions.
Every 13 weeks. We have one of our clients, Paul, that's got 40,000 employees. It's a big, big company. I won't say who it is, but literally every quarter the CEO approves all the hires. They determine, are we going to make it or not? Because if he says
it's like a short-term lease, they got to renew your option every 13 weeks or every 26 weeks or something.
It's really crazy. If he says we're going to make 39 cents this quarter, they're going to make 39 cents, and if it means they have to push something out till next quarter, they're going to do it.
Wow. So in that world, somebody told me that employees have to stop thinking themselves as working for a company and think of it as working with a company. What can you do for me as much as what they can do for what? It's both ways. It's not just what I can do for you, Mr. Company. It's what you can do for me.
Yeah. Well, today it's funny. We've got less than 4% unemployment, so it's definitely an employees market, and it still is. Even if the economy's slowing down a little bit, towards the end of last year, our growth wasn't as good as it was towards the beginning of the year, and even now there's a lot of caution in the market. So
caution, fear, chaos, confusion. We've got trade wars brewing. We've got debt soaring through the ceiling again here. We've got chaos and controversy and possible impeachments in Washington. I mean, it's never been more confusing in my life, really. Maybe the 60s when I was a kid, it feels like that again. And yet, the financial markets go on. Businesses have got to keep growing and making decisions in uncertain times. And I don't think they like uncertainty.
No, they love certainty. Anytime, if you put the word caution, whether it's cautiously optimistic or cautiously pessimistic, it's never good. Companies get stuck in molasses. They don't make decisions.
Yeah,
and so
right.
That can become
We'll wait to see how it turns out.
Exactly,
right?
And that's how recessions happen. A lot of times recessions are self-fulfilling prophecies where, well, we're thinking it might get soft, so we're going to stop. And then, their vendors aren't getting as much business, and so they're going to slow down their buying, and it goes all the way through the supply chain. And before you know it, you've got a slowing economy. And so that's probably a little bit about what we're feeling right now. It's nice that the Fed came out yesterday and said, hey, we're going to pause, and we'll probably pause for the entire year.
But that scared the markets. Like, oh, what do they know that we don't? Things are slowing. Something must be happening bad here.
But I think we all knew that. I think everybody knew that. And then with an uncertain Fed who might be raising rates, my money manager tells me, the Fed is the one that causes the recessions.
Right.
They raise rates and people stop doing things because they can't afford it anymore. And when that starts happening, then all of a sudden you've got yourself a recession.
That's a successful guy when he just casually says, my money manager here. I'm thinking my money manager is I reach in my pocket and tell me how much I got to spend today.
My money manager is at Charles Schwab, though, and I pay $4.95 a trade, but I read all their news.